All right, welcome back for part two of this two-part series where we're covering every valid trade setup that occurred during the month of July. If you did not catch the first part of this video, it's very important that you go back and watch that so you understand where these levels are coming from that I'm saying we had a trade from. It's important you understand that these levels are all pre-selected, understand where they're coming from, and then also understand the merit of the entry. So go back and watch the first part of that if you have not, and we'll continue on with the next trade. The next trade was on the 22nd of July. 22nd of July, it was again a euro short here from the 0959 level. That was up near the highs. Came into 0959 and we had a nice stop run, confirmation of the downside, pullback that got to within about 15 pips of the high. Ultimately, the trade ran to the downside and would have hit a full take profit. The reason I'm not personally counting this trade is because I had a cycle bias on this day. So I was technically only looking for the second push to the upside. For anybody that does not trade with a cycle bias, would have been a nice trade. But for me personally, I'm not going to count this one just to be as absolutely conservative as possible, and therefore this is not added to the trade count. And the actual next trade was on the pound on the same day. So we go over to the pound on that same day there, the 22nd of July. So our level on the pound was 56.34. Now 56.34 was up here, and we had a nice, again, the stop run confirmation of this level. Comes down, creates a stop run confirmation. We get the pullback here, and that pulls back to within about 13 pips of the high. Plenty deep on the pullback. This trade, much the same as the euro, ran off and hit a full take profit. This was the 15th trade of the month, and that brings our total for the month from 23% up to 27% total. So our next trade was a euro long from 0933. That was down here. The level, I should say, was at 0933. So basically what we had, this was a little bit of a unique situation because we had an upper level that we had to contend with. So we had a lower level that had really formed and established itself. It produced a great confirmation of the upside, produced the pullback for the entry. The issue came when this created a confirmation back the other way. So it got me out of the long, and it had an up and a downside to it. Because that lower level was in existence, it kept me from taking the short, or based on the rule set, it would keep you from taking a backside of the level trade. Keep you from taking a confirmation type trade on the backside of that level. But it also got me out of what would have been a successful 40 pip or 4% trade there overall. So a little unfortunate as far as that goes, but ultimately, if my worst case scenario is a break even scenario, then I'll take that each and every time. Okay, we continue forward. This was on the 27th, so we skip forward a few days. Over the weekend, I should say. Skip forward past the weekend. And we have our one and only losing trade of the month. Now, this was a trade on the pound short 55.72. And like I said, we had one losing trade this month, which for us is great because really the power of this setup is not in the win-loss ratio. It's really not. That's not my main primary focus or the main strength of this strategy. The strength of this strategy is that you could win 50% of the time or 60% of the time, and generally with the risk reward associated with these setups, you're still going to do fine. So when you have a month like this, what was strange about this month is that we increased our win-loss ratio dramatically, but we also decreased our risk-reward ratio dramatically. So a little bit of a trade-off there, but anyways, that's another story. So 55.72, we confirmed down, and we just about had a perfect month, but this one came up, stopped me out by about 2 pips, and then ran off to the downside from there, unfortunately. So again, just about pitched a no-hitter last month with no losing trades, but ended up getting closed by 2 pips to take this trade into a 2% loss, and that brings us down to 25% of the month. All right, next trade. Next trade was on the euro. It was a euro long. Again, skip over the weekend here to the 29th, and that was at the level of 1023. So on the 29th, 1023. We come down, we create a stop run at that level, we create a confirmation of the upside, all the pullback that we would have wanted, and the close for this trade was just prior to the news. Now, those that held into the news, which would not have been me, I don't hold into news that is capable of spiking the market more than 15 pips. For those of you that did, you got a little bit of a reward here, and it went up and hit your take profit. Would have been nice, but remember, that could have just as easily went the other way. In my opinion, it's much better to take the 2% gain just prior to the news than risk taking, losing the 2% gain plus losing another 2% on your stop loss. So at the time of that trade, you had the potential to lose 4% of potential profit, and you only had the potential to gain another 2%. So your risk reward is really skewed at that point. And if your risk reward is skewed in the way of a positive result, that's great. But remember, you have a 50-50 shot of the news coming out in your direction at that time. So if you combine that with a negative risk reward, it's just not a good picture if you were to do that consistently over the course of 100 trades. If you had a 3-to-1 risk reward ratio and you had a 50-50 shot, well then yeah, you have reward to risk. Then yeah, you're going to end up with a very profitable strategy. But in this case, just didn't like it from any other from the aspect of holding into that news. And our rule set says that we don't, therefore 2% gain. That takes us from the 25% back up to 27% overall in the month, and that's the 18th trade. The euro and the pound had a setup on the 30th. So we'll go over to the 30th here, which is just a day over. Now the pound was setting that we had an upper level on the pound, just to recap, upper level here. The pound confirmed short and the euro was confirming long. In that scenario, we will pick one or the other. Now, the euro would have resulted in a 2% loss, and the pound, if you go over to the pound, would have resulted in a 4% take profit. So in this scenario, although I did mention many times that I favored the pound, I did not take either of the trades. And in this case, even if I had two opposing setups, I'm going to call it a break even, or call it basically a break even, cancel each other out type of scenario. If you were to split the difference, 2% loss or 4% take profit, you would still call it a 2% gain. But again, keeping things as absolutely conservative as possible on the numbers, and therefore I'm going to call that a break even scenario. And that was technically the 19th and the 20th trade there on the month. Continuing forward, we continue forward to the final trade of the month. It was a euro trade on the euro, and just like we've had so many of that month, another euro short from 1082. So there was our level, stop run, confirmation, all the pullback in the world that we would have wanted, and then a full run out for a 4% take profit. Absolutely no issue there on the take profit. So beautiful month. Ended up with a 31% total for the month. Again, another great month that we had. May was roughly right around 20%. We had the month of June sitting right around the 12% mark, and then July ending up right at 31%. So great month, great couple past months, and I expect it to continue in the future as it always does. The bottom line, guys, is if you're tracking liquidity, there's one thing that cannot change in this market, and that is the market simply must enter an area of liquidity if you're going to see somebody that actually matters entering the market. So that's really all we're doing. We're identifying points of high liquidity, where high liquidity is likely to be located, and then we're trading once our valid confirmation entry rules are satisfied, and that's all we're doing consistently over and over. It's really important to note that what we do is extremely boring, and that is why it's so profitable, because we're not trying to chase every single move in the market. We're really only looking for the cream of the crop, if you will. We're looking for the absolute best of the setups based on where the highest risk-reward scenarios come into play. And that's the point of the strategy. That's the point of really the purpose behind what we do. So to summarize the month, we had one losing trade on an entire month, just absolutely great from that aspect, and a 31% gain total. To summarize in regards to what this can do to an account over the course of time, I want to do a hypothetical. Now, I rarely do this just because I absolutely hate the pie-in-the-sky type numbers that a lot of the furus, as I term them, will give off when they talk about win 90% of the time, or all this generic BS that simply doesn't work in the real world. But what I want to touch on is reality and the power of consistent, steady compounding. So we're going to take actual real numbers, our actual numbers from the month of May, actual numbers from the month of June, actual numbers from the month of July, because that's what I've done a video on here recently. And if you were to take, let's say, 20%, so that's 20%, and imagine that's percentage, so 20% for the month of May, let's add 12% to that for the month of June, and then let's just say July is 30%. Actually, I guess it doesn't matter in this scenario, so let's put the actual number in of 31%, and that equals, just add that up, that's 63%, so let's divide by 3. You'll see why I'm dividing by 3. That'll give us our average. So that gives us an average of 21% on those 3 months. Now, what I have done is I've taken that number and actually, again, went a little more conservative, just rounded it down to 20, and took this right here, took 20% a month as an average, again, taking those numbers that we've used. And if you take a $5,000 account, I want you to do this with your own calculator. If you don't trust these numbers, or if you want to see these numbers for yourself, do it with your own numbers. Maybe take half of 20%. Maybe only do it with 10%. And see what that really does to an account. But if you take that $5,000 and you, if that's the size of the account, again, do it with whatever size is reasonable for you. And what I did is I did plus 20% equals, that gives me 6,000. So the first month, 20% gain, bring you up to 6,000. Do that over the course of 3 years. What you'll realize is that if somebody were to gain 20% on an account, a $5,000 account, over the course of time, in 30 months, so in less than 3 years, that account compounded would grow to over $1 million within 30 months. Now, do I believe somebody can do that? No, I really don't. I don't think that that's possible, because you're not, once you have $100,000 in an account, you're not going to risk 2% of your account value on every single trade. You know, especially once you get up to the higher numbers, $250,000, $500,000, you're just simply not going to risk 2% of that on every given trade. Now, I personally don't and would not. Maybe somebody will, but based on that fact alone, in my mind, it would be very difficult to do that. Also, you got to take into consideration that traders do lose. There will be a month where I lose money. It happens. It happens to the best traders in the world, and anybody that tries to tell you they have a strategy that has never produced a losing day, a losing week, a losing month is really lying to you. Because the bottom line is the best hedge funds in the world, people that have track records of 30 plus years, have had times where they lose. And then that's a simple fact of trading, and so it's the consistency over the course of time that gets you through. But that really just illustrates the point. It illustrates the point of what compounding has the ability to do, and it should illustrate how consistency is the key. Now, people look at this and they say, well, God, 30 months, that's 2.5 years, that's such a long time away. A lot of you guys listening to me will have been trading for a year, 2 years, 3 years, maybe longer. A lot of people listening to me right now have been trading that long or longer. So what if you had taken that mentality when you first started trading and you said, you know what, I'm gonna use consistent, safe risk per trade. I'm gonna go for consistency rather than the home run. I'm gonna stick with one strategy, and I'm just gonna compound it over the course of time, again and again and again. Well, where would you be at this point? Only you have the ability to answer that question, but one thing that I can say for certain is that the time will pass again. In other words, 2.5, 3 years from now will come in the blink of an eye. It'll be here before any of us knows it. So where are you going to be when that time comes? That's the question. And so get into a consistent strategy, a proven strategy, and then stick with it. Do not system jump, whether it's, whatever system it is. Once you have the faith to start and stick with it, do just that, stick with it. Because jumping from system to system is one of the surest ways to lose money over the course of time. Stick with what you have, stick with what you know is consistently working, what you trust is consistently working, whether that's what we do at Day Trading Forex Live, Whether that's something else that you personally feel comfortable with, whatever it is, stick with it. Be a master at that one craft, and that's what's going to give you the highest probability for success. Now, one final point is if you want to learn more about what we do at Day Trading Forex Live, what I would recommend is going to and clicking on the link below this video. If you're on YouTube, it'll direct you to the Forex course page. We have a members area where we have our bank trading course. We teach you the entire bank trading strategy as well as all the additional add-on videos that we have for the course. We also have a live training room twice per week. This room is recorded for those that cannot attend live. And then most importantly, I do a video preview every night. I select these manipulation points that you saw these trades from. I select them every day in advance, so you know exactly what levels you're going to be trading from. It allows you to, again, know exactly where you're trading from. And then it gives you the ability to not have to sit there and stare at the screen all day. Finally, members have access to the members forum, the member chat, where members talk with each other. You have your own chat section, your own forum section, and again, it's just really a great community to learn how to trade. So if you have any questions, feel free to shoot me an email at daytradingforexlive@gmail.com. Be happy to get back with you. Otherwise, until next time, happy trading.